Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Shawn, do you need a Axon Tire desk pad for your desk?
You always know what I need before I know that I need it. It's amazing.
I must be in sales. You know what I mean?
You have an intuitive sense of what your customer needs. I'm really hats off to you.
I'm if I could only use that power for good, you know what I mean? It'd be things could go a long ways. Axon Tire is giving away a free desk pad, which is similar to the mouse pad that you got last time, but that desk pad will give you the same functionality as the mouse pad did with all the metric tire conversions and what have you and all those things, but it's going to be big enough to fit on your whole desk, and it's like a giant mouse pad. So you have two little mouse pads and a giant mouse pad, and you can use that for all of your metric conversion needs. So if you want one of those, send an email to marketing@axontire.com, and Axon will send you a free desk pad. So make sure the Moving Iron Podcast, make sure you tell them the Moving Iron Podcast sent you. So go to marketing@axontire.com, and they will drop that to you in the mail. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or private party, AgDirect can help you finance it. You can apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. Shawn is with Hackett Financial out of Boca Raton, Florida, and he is nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you doing this morning, man?
I'm doing good, Casey. Really looking forward to the show today.
Good deal, buddy. Well, there's plenty of stuff to talk about. I will say that since I started this podcast and started the market side of the podcast, I don't know that we've ever looked at each other and said, what are we going to talk about today? Because there's no lack of news anywhere. So market's reaction has kind of been all over the place to Ms. Pelosi's Asian soiree, I guess is the best way to put it. And flying around and see what's happening, going all over, talking to Taiwan and whatever else and getting everybody fired up about that. So there's that going on. We've got some good rains in some of the key growing corn belt areas of the United States. We still have some pretty intense heat out there as well going into soybean pollination. And I guess as you look at that kind of whole picture there, Shawn, what are your thoughts?
Okay, we've continued to talk about how we thought August here would be a bullish turning point for grains, and they're actually turning up markedly now. We're actually seeing the markets putting in lows and starting to really turn up. The market's starting to get their hands around the idea. The crop conditions last night were not very good. They deteriorated quite a bit, despite the fact that the weather was less threatening. But I think they're coming to the realization that the crops are going to be okay, but not great. And that's not going to cut it to rebuild the ending stocks that have been depleted here for the last 2 years. And so I think that's the realization that we're almost sort of moving away from weather now, Casey, almost getting here into mid-August. And we're just getting to the idea that we're just not going to have large enough crops. We have very, very dry weather that we're going to have to plant the winter wheat crop here in September, October. And we're going to have to worry considerably about the upcoming, at least the first third of the growing season in South America at a time that the U.S. once again has not been able to rebuild their ending stocks. And I think that's the message here. And I think that's why the grain markets are starting to turn up. And I think they'll continue to move higher here, Casey, into the fall and maybe even into the fourth quarter, before the El Nino weather pattern starts to kick in and we start to get a sense that South America is going to have those big crops that actually will put some of those global ending stocks back into the, back into the bins. And then the market will worry about an El Nino year for 2023. And that could mean big crops for the U.S. So I think, that's where we're at. As the more important low should occur next summer, but I think this is a solid intermediate low. And so what we've been telling our customers, livestock producers, is get some of your cash feed needs taken care of into the end of the year, maybe a little bit into the first quarter. Don't eat a short-term rally here. And if you're a farmer, unless you absolutely positively have to sell, as we made our recommendation to sell back in May, cash sale when prices were near their top. and we're telling them to hold off and wait for a better opportunity to cash sell their crops here as we get into the latter part of the year. So really nothing new that we've been talking about, but we're starting to see confirmation that the markets are beginning to react and act in the way that we've been suggesting. So.
Yep. Okay, so let's look at the crop progress report here just a little bit. It came out this morning, kind of just some highlights of what they had out there ending for last week. And if you look at where those and it's not a big swing by any means. So I mean, I'm just kind of pointing some stuff out here, but the good to excellent rating on corn last week was 61%. It's 58% now. Soybeans were 59% last week. I'm sorry, 60% last week and 59% so far. This last during this report. Spring wheat is actually doing quite well. I mean, but it's only 9% harvested. So, but you have 64% good to excellent there. But last week now you're looking at 70. Winter wheat is cruising right along. They got 91% of that harvested. So they're doing good there. And then cotton, when you look at it, it was 31 or 38 last week and had a pretty good decline this week down to 31. So that's a 7% drop. So you're seeing a pretty consistent pattern as the year goes on. And as you start looking at what this looks like, how much of that is just, USDA didn't carry one somewhere, and how much of that is the stress from the heat and some of the lack of moisture that we're seeing in some of these key growing areas?
Well, I mean, look, we were very clear that we didn't think that this would be a major drought cycle year. And what I mean by major drought cycle, I mean, a major crop problem.
Sure.
And it's not going to be a major crop problem, but it's not going to be a great crop. We have not had enough rain. It's been very spotty. It's been very selective. We had some intent, even though the heat's backed off here in August, like we suggested it would. A lot of the damage has been done in June and July when we had some excessive heat, and there's just not enough moisture coming in. So once again, the crop can get through. We started the growing season with better subsoil moisture than last year. So it's going to be okay, but you just aren't going to have a top end trend line, above trend line year crop with June, July being as hot as it was, and with the moisture being as inconsistent it was. And the crop conditions are beginning to reflect. Now they typically do fall at the end. I mean, that's as you get closer to maturation, there's a natural degradation of crop conditions, but they are falling more rapidly than you would expect them to see. And that's just a consequence of the cumulative stress throughout the season and pretty much telling you, good, but not great. And does that mean, it means that the ending stocks are really not going to change much? Okay. So, the USDA is going to come out on Thursday with their latest taxpayer dollar report. And, we don't ever know what they're going to say, but ultimately, we're not going to be rebuilding any stocks of any concert. And, with the huge correction we had going into late July, there's reason to put some weather premium back into these markets as we worry about South America going, at least for the first third of the growing season. And, the demand's still there. I mean, cattle still have to be fed, hogs still have to be fed, so do chickens, and that's not going away. So,
yep. Okay. So speaking of being fed, you got two more ships left Ukrainian port on Tuesday. And this is from the from the Turkey defense minister. It looks like you had one that was carrying 64,720 metric tons of corn. And then you had another one that was 53 million metric tons of was a sunflower meal for Turkey. The other one was going to South Korea. Slowly but surely, they got a few more going out there. They had Ukrainian ports have four more ships that left Ukraine on Sunday. So just starting to see somewhat of a trickle leaving there. The key port that really would have been the one that could have got stuff out of there was Odessa, but there's 4 or 5 other little ports that kind of go through. But the major ports, Odessa, obviously they got blown up shortly after the agreement got signed. So I guess as you're looking at that, how do you think the market's reacting to this? Because it's not, I mean, the first time the first ship got out of there, it has a big reaction, but we're not really seeing that now. It's kind of more of a, hey, let's wait and see what happens. And if it does, it does. If it doesn't, it doesn't.
Just remember, we traded at or below where it was before the Russian invasion here recently.
Mm-hmm.
So we've taken the entire Russian invasion premium off
the top, yeah,
that we put in. So, It's over. We've traded the reality that something's going to get out of Ukraine. And I think the market's now moving on to what it always worries about,
Supply and demand, huh?
supply and demand. And
Yep.
so only thing I can conceive of is that they might put some Ukraine premium back in at some point if this temporary flow of grain that's a goodwill effort were to falter, or another bomb goes off, or it's proving to be a fleeting window of friendship and that sort of thing. I just don't. I think it's already we more than already took that off, so I don't see that being a factor in the market. We're going to worry about what we're always worried about, the upcoming planting season in the U.S., the upcoming planting season in Russia, what kind of weather they're going to have as before they go into dormancy, South American weather, all that stuff. I mean, I think we're back to a more conventional weather-related supply-demand market. Yes, we're going to have to watch currencies like we always do in geopolitics, but for the most part, I don't see Ukraine grain leaving the station impacting wheat market or grain markets at all anymore. I think it's already priced in. In fact, I think it's overly priced in at this point. I think that's just a non-issue at the moment. So,
okay, and that's kind of the feeling that I've got too. You look at all the news that you read. About, I don't know, 30 days ago we were talking about this, and you brought up that the Ukraine thing is not a situation anymore. When's the last time you saw anything on the news about it? And if I don't look at Twitter and the occasional newspapers that I follow, I get the occasional pop up about something that's happening in Ukraine. It's hard to really find any good information about Ukraine anymore. So I think you're right. I mean, we've factored that out, and all markets have factored that out, and to some extent.
At some point, you move on. You could only trade a particular news item or story or event for so long, and it burns itself out. Every weather market burns itself out. Every geopolitical event burns itself out. Everything eventually runs out of gas, and you move on to a different driver. Right. And maybe it's Taiwan is going to be the next. Maybe that's going to be the thing that now moves the markets consistently. That every time there's news about Taiwan, that's going to be the driver. Maybe that's going to be the focus of the market going forward. And the consensus is that Taiwan conflict or agitation is bearish because of the worry that there could be a halting or a cessation of U.S. exports to China during a period of conflict there. And that may be true, but I would argue that if the Chinese are in fact going to go into Taiwan and create that agitation, I would think that they would first make sure they got their hands on every grain kernel they could in the U.S. and in South America first, and then go in.
Yeah.
So I think from a time perspective, I actually think they may be buying grains like we've never seen before. If they're in fact ready to do that, they're going to say, look, Pelosi did it. We're done. We're going in, but we also have to feed 1 billion people. Plus we got to make sure that we have a year's supply on hand. I don't know what the number is, but right. So what we're going to do is we're going to buy everything we can from the U.S. We're going to hope South America is big across. We're going to buy every single grain a bit supply we can from South America. And then when we got everything full to the top and we have our buffer stocks in place, we'll go into Taiwan. I don't believe they're in a position to do that right now. They can't do that right now because they would get cut off from supplies. And so I actually think it's bullish. And when you really look at what's happened, the market's been moving up ever since Pelosi's trip. Instead of going down, it's actually moving higher. And interesting, we follow open interest in overall commodities for capital flows. Capital coming in and capital going out. And what's interesting is when the invasion of Ukraine took place, we had a final spike in capital flows in, and then capital started leaving the commodity markets in March, and we're totally just getting out. So the media was telling you how bullish it was. We were going to starve to death, but the capital was leaving, and of course we had this big crash of commodities. Now we've seen a leveling off of open interest, and now the open interest is starting to turn up since Pelosi's meeting. Now the money is starting to come back in, yet everyone in the media are telling you this is bearish. I always say, don't listen to what people say. Watch what they're doing with their money. And the money is saying they feel this Taiwan situation, at least initially, might be a bullish trigger not a bearish one. There's something to keep in the back of your mind that usually the market will do something very different than what everyone expects.
Yeah.
So,
okay. Makes sense. All right. So let's jump over and talk about cattle and hogs here for just a little bit as you're taking a look what's going on there. Look, I mean, you're seeing some good, steady, I don't know, upward projections isn't the right word, but it's just steady market, right? I mean, there's some volatility in there, but it's nothing crazy to where someone's getting their head ripped off and there's these huge swings and stuff like that. I guess we'll talk about the proteins right now and see what's your opinion of what's happening right now.
As you know, we've consistently had an idea that we thought that livestock prices would be more friendly from the middle late summer into the fall, even into the fourth quarter, on a combination of the end of the herd liquidation cycle, and with the idea that China would have to come back for larger supplies as they inevitably reopen those 3 or 4 or 500 million people that they've been locking down, and get their economy going again and start printing a bunch of money and start spending a bunch of money, which they're already starting to do. It's extremely friendly to U.S. exports of pork and beef and chicken and that sort of thing over, and dairy, by the way, and milk as well. So I kind of feel that the market is starting to sense that, and we are starting to see some better prices for the livestock complex. Not milk yet, but certainly in cattle and certainly in hogs, that we've seen some better pricing, and I really think that trend's going to continue into the fall. We don't have a lot of lean hogs in the country. We know this. We know that the cattle herd's been thinned out significantly in the last couple of years, and if we are going to retain animals to rebuild them, as I believe we're now going to do, boy, it's going to be a very, very tight situation. The packers are going to have to bid up for these animals to bring them in. And even if demand's softer for a little bit for beef, and if the economy is showing some softer signals as it has been, I still think that's going to pale in comparison to the contraction of supply that's coming for the U.S. and the increase in demand that's coming from China for beef. So I think when you put it all together, sure, there can always be some setbacks along the way. We had a good run. Maybe we're due for a little bit of a short-term correction in the near term, but I think prices are looking strong, heading into the fall, early fourth quarter, and then we'll have to take another look at it. So,
okay, all right. One last thing, I guess, as you take a look at from an economy standpoint, there's a lot of articles out there that said this time next year we're going to have all this inflation is going to go away. We're going to be, we're going to go from 6 point whatever to 3 point whatever. And I guess as you're looking at that, I mean, obviously it's a supply issue that's still driving this inflationary thing we have. We got a ton of money out there floating around and hardly anything to, just supply chain issues and stuff that we're still seeing. Break out your crystal ball here, Shawn. But as you're looking at that kind of what's that supply chain look like going into 23 and 24? What's your opinion of that? I mean, I kind of tend to agree with it a little bit. I have to believe that once supply chains get back and running, that we're going to see some of this inflationary issues come down. Either that or a recession is going to make that happen, one of the two things. But I guess as you're looking at it, I mean, listen to guys like Rich Pasa, and he's like, yeah, this is a short-term thing, and I'm not too worried about it. What are your thoughts there?
If inflation is not a linear
Sure.
line. I mean, it fluctuates.
Yep.
We've had a big upward fluctuation. So sure, we're going to have a downside fluctuation. We're not going to, we're going to drop from 10% maybe down to 4 or 5%. But once commodity inflation gets going, which really drives the whole thing for the most part, it doesn't go away in a couple of years. We went back and we looked at over 400 years of commodity and inflation. And when the commodity inflation cycle gets started, it's kind of at minimum a 10 and as much as 15-year process, meaning you will have heightened inflation for 10 to 15 years. Doesn't mean 10% every year, right, but heightened inflation. Remember, we were dealing with 1.5 to 2% inflation. So maybe we go from 10% to 5%, but we stay at 5%, or maybe we jump to 7%. But we're going to be at an elevated level of inflation for an extended period of time. And the reason that this cycle has historically always been 10 to 15 years is because what drives the inflation cycle is a lack of investment in drilling for oil, a lack of investment in drilling for natural gas, a lack of investment in agricultural infrastructure, a lack of investment in agricultural technology. We had 10 years between 2010 and 2020, where we were in arguably a depression for agriculture, give or take, and where nothing was being put to work, no money was being put into the sector, and you could have said that for the commodities as well. When oil went to minus $35 a barrel, catastrophic for the industry.
Yeah.
So these are long investment cycles. When ExxonMobil starts to put capital to work, and it says today, we're going to try to find and put some new money to capital to work and develop some new areas. This is not we're going to start producing more oil next month. This is 5 to 10 year process that this starts to pay off. It takes typically at least 10 years for investments made now to start paying off with increased supply. And that's how you get yourself the end of a commodity inflation cycle. But remember, the first 2 to 3 years of a move higher in commodities after 10 years of depression, no one's really putting that much money to work yet. They're thinking about it now.
Right.
They're thinking about it.
Yep.
So if we go through 3 years and they're now just thinking about it, then it takes 3 years to actually deploy the capital.
Right.
And then it takes another 3 years for that capital to start delivering on the initial increases in supply. You start running the math, you're at 10 years. So there is no way to put this genie back in the bottle absent a complete catastrophic economic depression. There's no way to put this, my opinion, this commodity inflation cycle genie in the bottle in just the first couple of years. There's nothing in history that says we've ever been able to do that, and I don't believe we're going to be able to do that now. But are we going to see a lower inflation rate over the next 12 months? Absolutely we are. No question about it. That will be relief to a lot of people. That'll be relief to the Federal Reserve. It'll allow them to back off the pedal. It'll allow them maybe to be a little more friendly with monetary policy. It might allow the dollar to come down a little bit, all these things, but it's not going to do away with the inflation. The inflation is going to come back and stay elevated. That's the way we see it. Just looking at the commodities, there's other factors that go into inflation, Casey. It's not just commodities. Obviously, it's shipping and logistics and government policy. And there's other things that go into it. But the primary reason you have inflation or deflation is commodity lack of investment, and there's really no way to solve that in a couple of years that I'm aware of.
Right. Yeah. Good point. All right, Shawn, that's good stuff. Good place to stop there. So folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, HACKETT, advisors.com. A lot of really good information on there about our weather cycle work, our capital flows work that we do, how we make our recommendations to see if what we bring to the table could be of value to your services, and something we'll be obviously talking about in more detail with your summit that's rapidly approaching here.
What? Oh, that's almost here, huh? I guess I better get started. Yeah. That's a good point. Shawn will be there talking about what's going on with the overall commodity sector from his perspective and some of the driving factors he's there, as well as some really good information. And Shawn talks about sun cycles and how those work, and we're talking about the Gleisberg cycle here not too long ago and what that looks like. And if I never would have met Shawn, I would have not known what the Gleisberg cycle was, and an AMO and a PMO and all these different 3-letter acronyms that have things to do with things. So, I mean, a lot of great information there that you can see how these weather patterns are driving the marketplace, and Shawn's dialed in that. So, Shawn, go briefly kind of talk about what you're going to be hitting on there.
It's a completely different presentation than we've been putting out for the last couple of years, because we're going through a pretty big shift. In fact, I'm actually heading out on a flight here in a little while, going to Indianapolis for a big fertilizer conference, where I'm going to be actually doing my first presentation of this new concept, that as we're entering. And really the pillars are El Nino coming, La Nina ending. What does it mean in the short run and next year? The Gleisberg cycle coming thereafter, major 1 in 100 year drought. What does it mean? How do you handle it? And I go over some other factors. I go over some long cycle commodity cycle factors, some long currency factors, talk a little about cryptocurrency, cryptocurrency has attracted trillions of dollars of capital and is now a foundational part of how markets are trading. We go over what we think is going on with that. A lot of different things that go over, how commodities get priced, why we have these bullish cycles, how long they last, and where we think we are, and how all this climate fits in and where we think agriculture is going to be going, and how producers, end users, elevators, equipment manufacturers, how everyone should be thinking about how to manage this volatility in price risk going forward, so that you can kind of get yourself on a good path. Because we always say you always have more prosperous times in agriculture if you have price volatility. 70s was very prosperous. The 2000s was very prosperous. The first couple of years of the 2000s has been very prosperous. When price volatility is low is when you have very difficult times for anyone in the business to make consistent good money in the industry. And so the whole concept is, though, that you have to be proactive. You have to be proactive. It's a time that you have to be making decisions, making moves, making decisions well in advance of what's coming, so you don't get run over by markets that surprise you, like many got surprised with what happened from between 2020 and 2022. Many people were not ready for that and got run over. Our job is to make sure they don't get surprised by what's about to come up in the next 2 3s, which we think is going to be even more volatile than what we just saw. So it's a brand new, fresh presentation. So anyone that has watched me or seen me at your summits the last couple of years will be, I think it'll be very refreshing and something very, very different. So,
right on, a whole new set of problems, Shawn. Attaboy. There you go.
Hey, I can't control what's coming. I can only try to tell you what I believe is going to take place. It's up to us to be proactive, but better to know what's coming than not.
That's right. That's a good point. Good point. All right, Shawn, folks want to reach out to you one more time. What's the best way to do that?
HackettAdvisors.com is our website. Sample reports, white papers, podcasts, video interviews. Everything's on there to see if what we do might be of value.
Right on, man. So check that out. Shawn's got a lot of the information on that website. Check that out. And if you go to YouTube, there's a lot of videos of Shawn talking about different stuff too. So check that out as well. So I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, at Moving Iron Podcast on YouTube, or not, well, on YouTube, Moving Iron Podcast channel. Yeah, on YouTube. Check that out. Also on LinkedIn at Moving Iron Podcast. So if you want to come to the Moving Iron Summit, I've got about 15 spots available. So if you're interested in doing that, you want to be the 15th caller and jump in there. I'll get you on the list there. But I got about 15 spots left. So if you're interested, come and check that out. Go to MovingIronLLC.com, upper right-hand corner. Sorry, click on the Moving Iron Summit tab. The agenda and all the hotel registration information is there. So check that out. So this is the biggest crowd I've ever had come. Right now we're sitting at about 50 dealers that are going to be there. We got about 100 people coming in. And we got some great sponsors going to be there as well. Great speakers like Shawn are going to be there. So if you're interested in doing that, like I said, I got about 15 spots left. So check that out. So I think you'll have a good time when you come. Great networking opportunity for anyone in the equipment business. So check that out. So with that, I'm Casey Seymour. Now, one more thing. Alex Yurchenko is coming back home. He's on his way back from Ukraine, and he's going to take a breather, and he's going to go back. So if you're helping out, want to help Alex still, he still needs all the help he can get. You can go to the show notes, and you'll see a GoFundMe link. Check that out, or you can just go to GoFundMe.com and look up Help Alex Transport Humanitarian Aid from Poland to Ukraine, and you can donate there. So with that, I'm Casey Seymour. We're Shawn Hackett. Let's move some iron, folks. Out.
Moving iron in the 21st century.